It is Monday, August 10th, 2020. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was yet another non-virtual get your ass kicked at Jiu-Jitsu Monday. Although I did do a little bit of ass kicking today. I won't say that any of the submissions I got were graceful or that they were even appropriate. Two of them were kind of wrenches. I did kind of a cross-face wrench on the guy on the first one, and then the second one, I can't remember exactly what I was working toward, but I was keeping my head pretty low towards his hip, and I tried to work it around to an arm bar, but that did not work. I still managed to stay on top of him though, and I'll admit the gentleman was a white belt, but he was not an inexperienced white belt. And this is something I kind of had to remind myself after the fact, because I did manage to get him 3 times. But you know, I'm not saying I'm like Mr. Pro or anything like that. I just, you know, there's days you get got and there's days you get him, and today I got him. But anyway, I did one or two interesting things I think that really kind of made the difference, and one of them was, at first I was just taking it easy, you know. As a matter of fact, he until I got on top, I wasn't really all that aggressive. I just was more passive and just trying to keep him from subbing me. And it was funny because I kind of let him get it to full mount, but you know, he got there on his own. I didn't just like say, hey, get up on mount, you know. But he got there on his own, and he was pressing for a what do you call it, a Kimura setup. You know, he was pushing both hands on one forearm and kind of pushing it down. And so I clasped both hands and I rolled into the direction that he was going, and then he kind of went for the back take, but I snuck out of it, and I can't remember exactly how, but I managed to navigate that around to where I was mounted on top of him. And then like I said, I tried to go for a Kimura, and I goofed one up. I probably could have gotten him with the Kimura, but I kept getting confused between that setup and the Americana setup, and I almost got him in Americana too, but he managed to keep his way out of that. But yeah, I had the setup for the Kimura, and I should have gone for it. I really should have, but for some stupid reason I couldn't remember the proper hand grip for it, and so that did not happen. But I feel like I'm starting to get my sea legs a little bit with regard to jiu-jitsu, and it really didn't feel like it until last Friday, when we were doing some reverse De La Riva stuff, and I think it was like the last few minutes, really, of the class. You know, we'd been doing reverse De La Riva stuff for like a fucking hour, and me and my partner, and I managed to get my hips up off the ground. And as soon as I did that, and I was able to get that really good grip around the back of his calf, suddenly the reverse De La Riva made a little more sense to me. And I'm still having trouble with kicking my body weight around with the other foot, you know, because there's like I think it's like a reverse crab or a crab or something. I can't remember what the name for it is, but it's after you get your opponent to pop forward, and that was the part that made so much more sense after I was able to get my hip up over his ankle. Okay, as soon as I got my hip line above his ankle, I was able to exert enough force on the leg that I have wrapped around the back of his leg push him forward. And that was the toughest part for me, because and it was funny because the guy that I worked with, the partner that I worked with last time, very big guy, and the guy that I did it today with, my partner today, was again the same guy. And so I don't know why that is that I keep pairing with such big partners, but I don't know. I think it's because I don't really have a choice. That if I ever compete, the chances that the person is going to be bigger than me are really fucking high. It's one of those problems that I've always had, that because I'm a little bit heavier, I'm only 5'6", but I'm like 200 pounds, so, or a little over 200 pounds. So, even if I were to get down to 190, chances are my opponents, the likelihood of them being lighter than me is really, really low. Now, if I was like 150 or maybe 170, the chances would be a lot higher that I would be going against an opponent that is lighter. But the fact of the matter is that my body weight, my frame, the likelihood that I'm going to be going against somebody that is like 6 feet tall, about 230 pounds, is pretty fucking high. And so, that's just who I got to train with. I got to get used to getting a full guard with somebody of that size, taking advantage of the size differential, and because there are advantages to being smaller than your opponent, and it wouldn't seem like it, but there are pretty good advantages, especially if you know how to move around your weight, if you know how to keep your guard. It's a little better situation, And so, anyway, my particular partner for the day, like I said, he was a bit larger than I was, and I had a lot of trouble pushing his weight forward last week, because again, I was having so much trouble getting my hips up. But once I got my hips up off the ground and a little bit above his ankle line, it suddenly made sense. And so as far as what the movement for the day is getting more up towards like a back take position, or even a guard pass. I was taking it to a guard pass. But the one thing that I noticed is on the frames that we were working today, we were working the frame of the opposite arm. So if your opponent has you with their right arm, or has their right arm extended or something, their left arm, you want to be framing on their left arm, because that's the arm they're going to come in with to secure around the back of your neck there and pull themselves in. And yeah, that happens to be my favorite. And so anyway, the movement is to try and prevent that. So you want to frame on that arm so that they can't bring that arm in. And I kept using that as an opportunity to take it around to where I got into a full guard position. And see, the difference is, like with the jiu-jitsu I was learning before, we would probably be going for that knee first. Taking, instead of framing on the arm itself, framing on the knee. And I know that's kind of weird, but if you frame on the knee and you keep it out, he can't reach around far enough to get to the back of your neck. And that's, so I was putting my hand on his knee and then on his hip. Even with your hand on his hip, he can't reach around and get that hook around the back of your neck to pull you around to get on that side control. And so that's where I start with regard to frames. Is I want to hold off your legs, because if I can push off your leg, I can probably get my leg in between us, or at least I can get my other leg pinched onto your back and start working up towards maybe a triangle position or something like that. But anyway, so I don't know. I feel like it was a productive class. Me and my partner seem to be getting along very well, and I don't know. I've noticed that he's moving around quite a bit better too. So it's I started to wonder if he had maybe started training before the shutdown and all that, and that he's starting to catch back up with where he was before the shutdown. But then again, it could just be linear progress. You never know. Anyway, let's go ahead and throw down with some music. And we're going to start with some body count. But where to go with the first dance? Well, I'm feeling this one because, I got just a taste of victory today, and so here it is. Carnivore, First Dance, here on Coin Metal. And that was Slayer with Stain of Mind. And so, as far as what we're going to get into today, I got completely derailed. I was dinking around on Twitter while I was waiting for the end of our music break when I came across this little gem. And I'll tell you what, if you wonder why the economy is in the state that it is, I think anyway, it's because advisors like this guy keep popping up and saying the weirdest shit, and people bother to listen to him, and people that make policy decisions are listening to him. Or I don't know how much pull he has these days, because he's been quite off about a great many things. And after a while, people stop investing their attention in you, especially if you say stuff that proves not to be true. And so I got this thing here. It's on zerohedge.com. Krugman says gold's rise has nothing to do with investors expecting soaring inflation. And this is by Tyler Durden, so it's probably aggregated from somewhere else. And this is authored on August 10th, 2020 at 22:55. Even in the most obvious of circumstances, the Fed is printing trillions of dollars within the span of one fiscal quarter. Paul Krugman seems unable to make the basic link between purchasing power, the money supply, and the price of gold, and refuses to even consider the recent worldwide reversals in such prominent former deflationists as Russell Napier, Albert Edwards, and Russell Clark, all discussed previously. Everyone's favorite financial muppet took to Twitter over the weekend to offer his perfunctory take on an op-ed written in the New York Times titled, "Why is Everyone Buying Gold?" in which none other than the chief global strategist at Morgan Stanley, Ruchir Sharma, validated long-ridiculed gold bugs. And I guess this is a quote from him. Gold bugs, investors perpetually bullish on gold have long been seen as a paranoid fringe of the financial world, holding to the shiny asset as a hedge against a disaster they always think is near. But lately, they appear to be onto something. This year, gold is the best performing traditional asset in the world. They say traditional because Bitcoin's blowing the shit out of it. Its price just topped $2,000 an ounce for the first time. From serious investors to newly minted day traders, everyone is talking up its virtues. Quote, "It seems we're all gold bugs now," the op-ed capitulates without mocking that other expert from WSJ who 5 years ago called gold a pet rock. It also attributes the rise in gold to central banks having lost control, or rather, as Russell Napier put it, conceded control to the government, and that inflation is a foregone conclusion, stating, quote, "But the gold mania is also driven by a hunch that the easy money pouring out of central banks and government stimulus programs could trigger inflation, which makes it a more worrisome economic omen. He is spot on, but for the fact that the inflation is defined by an expansion of the money supply and not rising prices has already been created. Likely irked by the fact that the New York Times published something on finance that redirects attention from his clueless echo chamber, Krugman took to Twitter in response. Quote, "Gold prices aren't rising because investors expect inflation." Krugman tweeted, "Instead, he claimed that gold prices were rising because bond yields are falling." Quote, "Here's the 10-year break-even inflation rate, the rate that would equalize rates on inflation protected by ordinary bonds, plus the yield on those inflation-protected bonds." And that was by Paul Krugman, and I guess it's some tweet with some charts. Hiding behind the central bank's definition of inflation, which according to Keynesians doesn't even happen until it shows up in the heavily manipulated CPI, Krugman argued, quote, "The implied inflation forecast is actually lower than it was last year. What's happened is a plunge in yields, reflecting economic pessimism," he continued. He then tweeted out two charts showing the 10-year break-even inflation rate, but apparently during this deep dive for his Twitter rant, the Nobel Prize winner wasn't able to locate and post a chart of the M2 money supply, which may have been offered up more clues as to why everyone is bidding up gold. In other words, nobody cares about the inflation forecast, Paul. They care about this, and it's a big old spike at the end there on the Fred. Incidentally, one other thing that Krugman never even considered is that gold is now a hedge to both runaway inflation and deflation, something we have discussed extensively here over the past decade. Then again, this is the same guy who said the internet's effect on the world economy would be, quote, "no greater than the fax machine." And yes, even the vacuous libtards at Snopes were forced to admit that their econ god is clueless. This is also the same, quote, Nobel Prize winner who, the day after Trump won, boldly predicted that, quote, "markets will never recover from a Trump victory," and that, quote, we are very probably looking at a global recession with no end in sight." Krugman concluded, quote, "The thing is, we went through exactly this story in 2008-2009, rising gold prices without rising inflation expectations because of falling yields, and even a blip in tips prices during the post-Lehman financial disruption. No excuse for being confused now. So thanks for the advice, but the only one confused here is you, Paul." And I happen to agree. I think he is quite confused on that. You know, it's like, I don't know, sometimes I think economists think that gold just comes, it just comes into existence. You know, that it doesn't require people with shovels and picks and earth movers and all kinds of other shit in order to get it out to the ground into the market. You know? And I want to go over some of the comments because I enjoy it. And the first one here is by Gunnery Sergeant Hartman. Krugman is proof positive that winning the Nobel Prize means nothing. Obama is a close second. That's right. Clueless economist responded, "Excuse me, you foul-mouthed, low IQ jarhead. DI, do you dare question my economic knowledge?" And Consuelo says, "If there was ever a cherry-topped event, it was for a carefully handled intelligence agency, political selection, whose birth certificate was a fraud and whose education bona fides remain murky at best, to win such a high honor. More like cue the circus music for juggling chimpanzees." I don't know if I agree with that. Yes, Horace says, "The guy is a joke." Yeah, I believe he's correct. Ms. Arable says, never trust the Amish, especially when they work for American Pravda. Yeah, okay. Let's see. Odin says, surprise, surprise, the tribesman's favorite economist yet again, denying that inflation is real. It is the primary mechanism by which our feudal lords extract wealth and prosperity from our people. Nah, damn right. Let's see, Krugman. Robert Moneyman says, Krugman, oh, shut up. Just another left-wing economist. Go donate $10 million to BLM. Nobody gives a fuck about your idiotic economic projections and lies. Yeah, apparently Craig has got his own reputation. I honestly don't think he's evil or anything like that. I don't think he's clueless either. I think he kind of knows what he's talking about, but I think he's getting the wrong message. And it is possible to look at one set of information and get two completely different theses as to why it's happening, and more importantly, by certain angles, both theses could appear to be correct. But only one of them will actually play out. And as far as I'm concerned, it's all inflation. I think the Fed has printed like $3.7 trillion this quarter. I mean, that's so fucking insane that, I don't think that people really understand what it means. I mean, you cannot print $3.7 trillion and have it not affect the face value of the ones that you have in your pocket. It's fucking impossible. You can manipulate things like the price of oil, and that can distort the relative value of gold and US dollars on the open market. But that effect is temporary, and it also leads to higher offsets when things do finally correct, when you can no longer afford the manipulation because it's not paying off enough to continue it. When it recovers, it'll bounce back even harder. And that has real world effects. And, I think that some people are really, really quick to dismiss it because we've been kind of lulled into a sense of safety with the Fed just printing money whenever it's really needed. But, at some point or another, I mean, the dollars that are out there in the market, they don't go away. And at some point or another, somebody's going to be selling enough of their dollars for something else that it's going to depreciate significantly. I'd be looking abroad for that. Maybe China or Russia divesting themselves of their U.S.-denominated holdings could really fuck us up. Anyway, so the next thing I got here, and it's kind of a backup to that last article that we read from Zero Hedge. This one's on the New York Times, and it's by Rashir Sharma. So yes, penis. Why is everyone buying gold? And this was authored August 8th, 2020. Gold bugs. Investors perpetually bullish on gold have long been seen as a paranoid fringe of the financial world, holding the shiny asset as a hedge against a disaster they always think is near. But lately, they appear to be onto something. This year, gold is the best performing traditional asset in the world. Its price just topped $2,000 an ounce for the first time. From serious investors to newly minted day traders, everyone is talking up its virtues. A recent survey of 1,000 people found that 1 in 6 Americans bought gold or other precious metals in the last 3 months, and about 1 in 4 were seriously thinking about it. On Robinhood, the popular online trading platform, the number of users holding 2 of its largest gold funds has tripled since January. It seems we're all gold bugs now. It's tempting to attribute the vogue for gold to a desire for a safe haven during the pandemic, a kind of financial panic reflex that will release as the crisis abates. But the gold mania is also driven by a hunch that the easy money pouring out of central banks and the government stimulus programs could trigger inflation, which makes it a more worrisome economic omen. There's an even bigger threat that's on the horizon along with that, and that's those stimulus programs being cut off. Serious investors have in the past dismissed gold as an asset that, for the most part, just sits there yielding nothing. In many ways, gold is like oil or iron ore or any other commodity people dig out of the ground. Most commodity prices rise and fall in cycles, gaining nothing in value over time. Owing to its image as a stable store of value when others are shaky, gold is held up better than most other commodities, but it still hasn't been a dynamic investment. Over the past century, the price of gold adjusted for inflation has risen by an average of just 1.1% a year, compared with 6.5% for U.S. stocks. Even the 10-year U.S. Treasury bond, considered the most risk-free asset in the world, has produced higher annual returns. Gold is shown mainly in hard luck moments. It surged amid the stagflation of the 1970s, rising more than sevenfold over the course of that decade to a peak at $850 an ounce in early 1980. It surged again after the global financial crisis of 2008, peaking at $1,900 in 2011, but then it slid backward over much of the subsequent decade. In 2019, after the Federal Reserve signaled that it was suspending plans to push interest rates higher, gold mounted another ascent. Historically, gold has done best when interest rates fell below the rate of inflation. As the inflation-adjusted return on bonds turns negative, investors feel comfortable owning gold as a store of value, even if it yields nothing. That is what has been happening over the past few months. With bond yields near zero in the United States and negative in Europe and Japan, investors have driven up the price of gold more than 30% this year after a gain of nearly 20% last year. In recent weeks, that surge has been turbocharged by growing expectations that all the money governments are pumping into their economies will reignite inflation. In addition, with valuations of stocks well above their long-term average, gold appears relatively cheap. And with central banks printing money hand over fist, some see gold as a stable alternative to the dollar and other major currencies. Gold is also pulling up the price of its less glamorous relative, silver, which is rising from an unusually depressed level because people see it as a cheaper play on the same trends. Goddamn right. For gold to keep rallying, expectations of inflation will have to keep rising. Anticipating higher inflation has been a losing bet for a large part of the last 4 decades, but the odds appear better now. Most nations are doling out record levels of stimulus at a time when forces like globalization, which kept inflation in check, are weakening. Normally, if inflation looms, central banks can be relied on to raise interest rates. But Fed officials have signaled that they aren't, quote, thinking about rising rates, and do not expect to move before 2022. Oh, shit. This is not a healthy turn. When interest rates are this low, money is virtually free, encouraging speculation in assets of no value to society beyond what the seller can get for them. Gold is the prime example just now. The wider risk is that this kind of purely financial speculation undermines the economy by sucking capital away from industries that will put it to more productive use. No. It's because we're looking at the economic shit going on out there and we're saying it's not likely that I'm going to get a better return by investing in something else. I better invest it in gold. That's what's going on there. As an investment, gold has none of the virtues I admire, like innovation and dynamism, and many of the vices I despise, including the rent-sinking mindset typical of extractive industries. But these times aren't normal. Unless a vaccine emerges whether or not a fucking vaccine emerges is fucking irrelevant. Central banks stop printing money frantically and real interest rates start rising again. It is difficult not to be a gold bug now. Yeah, okay. Yeah, so fuck your vaccine. That's not going to do shit. You know, as a matter of fact, I'd like to be one of the first to suggest that one of the reasons why the NFL and all of those sports organizations are considering not even having a fucking season, including colleges at this point, is because people have no fucking money. If you're getting by on stimulus right now, you're not going to baseball games, you're not going to football games, you're not going to basketball games, you're not even going to fucking hockey games. You know, the WNBA, the fucking players walking off the field because, you know, they want to like be some sort of protest or whatever. That's not happening because of protest. That's because there's 10 people in the fucking the seats in the auditorium. There's 10 fucking people in there. The rest of them are fucking cardboard cutouts. I mean, I saw something fucking hilarious on Twitter over the weekend. Among the cutouts that they had at a baseball game, somebody put in Bernie. And I don't mean Bernie Sanders. I mean Weekend at Bernie's Bernie. And can you believe that shit? But that's the reality we're looking at. They're putting up fucking cardboard cutouts because despite the fact they're making enough money on ad revenue to keep the place, even have the game, they're not making that money from you sitting in the seats. You know, they're like selling your personal information while you're streaming it on your phone or some shit like that. But they're not making that money from people being in the seats. And I'm sorry, that's not enough money to bother having a season. So now, you know, somebody was trying to blame that shit on Trump. I'm like, dude, look at the economy around you. That's why they're not fucking playing. It has absolutely nothing to do with Trump and anything that he has done. Other than the fact that personally I consider what's going on in like Portland and Seattle and whatnot, it's a type of protest by the governors and the mayors where they don't approve of Trump. They never have accepted the fact that he was elected and Hillary was not, and they're bent on trying to force the rest of us to live the Green New Deal. I challenge anyone to go out there right now, find the Green New Deal, read it, and then I want you to go to your governor's website or your state government's website or whatever and look at the policies that they're trying to enact in this shutdown. They're exactly in line. All the little social stuff that you used to do, you know, going to the bar and going to concerts and going to sporting events and all that shit has been like economically suppressed. You know, if you're receiving stimulus, you're not receiving enough money to afford to do these things. And besides that, the places where these things would happen have been closed. They've been shut down. Partially, I believe, in anticipation of the fact that you were going to be broke. I mean, personally, I look at this and I see it as the fact that our government, from the federal down to the state level and the city level, has been bent on prohibiting private investment and stopping all kinds of competition to private companies from developing. that they've got it set in their minds that, they want to pursue a certain economic focus on the rest of us, and that we're just going to go along with it. Well, I think that we're at a point right now where enough people have gone along with it for these city and state governments to start understanding that no, it does not work like it does on the fucking Green New Deal description. And that what ends up happening way before all the wonderful things that we think is going to happen by doing all this shit is that the city and state governments run out of fucking money. And because they don't have any money, they can't afford to keep people in prison. They can't afford to keep cops on the street. And that's why you're seeing fucking rioting and shit getting beyond one or two people breaking some glass. It's because they don't have the cops out there, enough cops anyway, to stop the person breaking the fucking glass. But personally, I believe that something is going to happen in the not so distant future. That these store owners and shit, they're not going to be waiting around for cops. They're going to be looking at their bills that keep mounting up, their rent, their electricity, the suppliers that they have to keep their fucking accounts open with. And they're saying to themselves, look, I got two options here. I can close down shop, which will bankrupt me. And I've got plenty of business out there that I can be servicing. And I'm going to fucking service it. And if anybody gets in my shit, I'm going to beat the crap out of them. And if I can't beat the crap out of them, and if they're big enough and whatnot that they can force themselves into my store and prohibit me from doing business, I'm going to get a bunch of my big friends to come down to my shop, and I'm going to pay them to stop anybody from stopping me from doing business. Now, I'm already seeing some of this, where individuals who are just sick of the fact that their government isn't doing shit, just going out there, a trash can and a broom, and cleaning shit up. I've seen multiple accusations now that quote unquote anarchists are among the people that are doing all these riots and shit. And I'll tell you what, a real anarchist doesn't do that. A real anarchist doesn't destroy other people's private property. Because a real anarchist isn't against capitalism. A real anarchist isn't against barter. A real anarchist isn't against personal prosperity. A real anarchist isn't going to wait around for government to clean shit up. A real anarchist is going to take it upon themselves to clean shit up. Yeah. And as with that, I want to go ahead and throw back down into some music. And, where'd it go, though? Well, I don't know. I feel like maybe a little bit of Exodus is in order. And, yeah, here we go. Objection overruled by Exodus. Here on Coin Metal. And that was 12-Foot Ninja with Dig for Bones. And so, I was doing a little digging around and I happened upon this. It's over on Bitcoin.com. NASDAQ-listed company sued for backing $2 billion loans with 83 tons of fake gold. And this is authored by Kevin Helms approximately 1 day ago. So yes, penis. NASDAQ listed company that allegedly used 83 tons of fake gold bars as collateral to secure loans worth about $2 billion from multiple financial institutions in China is now in default and facing several class action lawsuits. $2 billion fake gold scheme unravels. The gold industry was recently shaken when it was discovered that a U.S. publicly traded company was allegedly using 83 tons of fake gold bars to secure loans worth $2 billion in China. King Gold Jewelry Inc. is based in Wuhan, China, but it is listed on the NASDAQ and in the U.S. under the ticker symbol KGJI. Following the fake gold news, the Chinese jeweler informed NASDAQ in a filing that it had received default notices of approximately 10 billion RMB, or approximately 1.4 billion US dollars, from 7 Chinese lenders. These loans were backed by the gold bars found to be gilded copper alloy. The Shanghai Gold Exchange, SGE, has also terminated King Gold's membership, and Chinese authorities have launched a fraud investigation into the company. Furthermore, a number of lawsuits have been filed against King Gold as the company's stock price plummeted 24.11% on June 29th following the fake gold reports. One class action lawsuit was filed by the Rosen law firm with U.S. Court for the Eastern District of New York for violations of federal securities laws. It names King Gold, its chairman, Jai Zhihong, and former CFO Bin Liu as defendants, claiming that they operated the company fraudulently and deceived investors. Law firms Pomerantz and Braunstein, Gerwitz, and Grossman also filed a class action lawsuit against King Gold, its CEO and former CFO. The complaint alleges that between March 15, 2018 and June 28th, the company made materially false or misleading statements about its operations, specifically about using, quote, fake gold as collateral to fraudulently secure loans. It also failed to disclose material consequences that, quote, the company would face creditor lawsuits and be delisted from the Shanghai Gold Exchange, law firm Pomerantz described. In a July filing with the U.S. Securities and Exchange Commission, King Gold declared that its Wuhan operations, quote, have been significantly impacted by the disclosed loan defaults, related loan disputes, various legal proceedings, and the resulting freezing of bank accounts. Furthermore, the company's jewelry production was halted between January and April due to the COVID-19 outbreak and Wuhan's lockdown. To help small investors in China recoup their investment losses from large companies, the Chinese Supreme Court last week greenlighted a historical class action lawsuit for retail investors. The system will be a, quote, convenient and low-cost claim channel for small and medium volume investors and form a strong deterrent to financial criminals, the Supreme Court reportedly said in a statement. Are you fucking kidding me? They can't even stop people from scamming people claiming to be associated with China's upcoming CBDC. So, yeah, whatever. China's market regulators are investigating King Gold Jewelry over the fake gold allegation, calling for stricter risk management. Quote, a number of banking, insurance, and trust institutions were involved in the Wuhan King Gold Jewelry fake gold incident, the China Banking and Insurance Regulatory Commission said. Quote, other than the problems associated with the company itself, the incident also revealed that the internal controls and risk management of some financial institutions were empty shells. No shit. I've been saying this for I don't know how long. Probably since I started this show that this shit is gonna happen. I mean, you stopped the flow of money around, and you can hide this shit when you're shifting, billions and billions of dollars from here over to there, and you're doing it in securities. Some of them are fake, some of them are good. if your commissions are going up, do you really give a fuck? No. You're going to pump as much fucking business through as you possibly can, and you're going to lower as many borders that confine your ability to make money out of the way as possible. And that includes neglecting some of your security protocols, such as assays of the gold bars that you're receiving at your fucking bank. Give me a fucking break, man. People want their fucking gold for a reason. And it is because the central banks are fucking, they're trying to confine us down to digital coins, instead of having physical notes, because physical notes become terribly cumbersome when you have to carry around 10 times as many of them to pay for what you paid for yesterday with them. And this sense is not restricted solely to gold. Okay, we're starting to see behavior that indicates that people are looking for hedges against this effect. And one of the chief ones is in fact gold. And so I got this thing here. It's on news.bitcoin.com. And this is by Jeffrey Gogo. So yes, penis. Investors moved 10% of their gold from Hong Kong amid financial censorship fears. Now, they fear that the introduction of the CBDC, the Chinese CBDC, will be used to debase the currency to such an extent that their gold will be worth too much for them to be able to get it out. Anyway, continuing on. Hong Kong investors are moving their gold offshore as China's new national security law prompts fears of financial censorship. Some 10% of private holdings have been moved to safer jurisdictions such as Singapore and Switzerland since the beginning of protests in Hong Kong last year. In a recent interview, Joshua Rothbart, head of Hong Kong-based gold dealer and storage provider J. Rothbart & Co., said the new legislation has revived the bullion flight. Quote, many clients now perceive Hong Kong as riskier than other jurisdictions, Rothbart said. The development comes as the gold price peaked at $2,000 an ounce last week, the highest level ever. China is also in the mix as geopolitical tensions with U.S. have pushed investors to the asset. China's new law is seen as a move to curb foreign influence from Hong Kong, which has coexisted with the mainland economic giant in terms of the one country, two systems policy since 1997. Opponents fear that the legislation will compromise Hong Kong's autonomy from China, but investors specifically worry about the stability in the world's sixth largest financial hub. Quote, investors are moving gold from Hong Kong to Singapore because they don't like risk and uncertainty. Singapore-based precious metals analyst Ronan Manley told Financial Times, also citing fears of property rights and rule of law. The precious metal regularly moves between the two territories, largely in kilobars, with Hong Kong's main gold vaults, run by the international airport. Bullion by Post reports that China is the world's largest consumer of gold, but Hong Kong compares favorably as a storage destination because of mainland China's trade restrictions. Inflation fears during the coronavirus pandemic have made gold and Bitcoin increasingly popular stores of value, with the prices of both assets rising sharply in recent weeks. Bitcoin is currently trading at just under $11,600 and rallying on an 11-month high of $12,000 according to markets.bitcoin.com data. During the financial uncertainty posed by the pandemic, experts have debated about the contrasting merits of gold and Bitcoin as alternative stores of value. The physical impediments posed by the precious metal to investors could highlight the relative immunity of, quote, digital gold from financial censorship. What do you think about investors moving gold out of Hong Kong? Let us know in the comments section below. Let's see if there were any comments on this. 0! Okay, well, I think they're a little off. You know, the whole thing about China basically repositioning itself in orientation to Hong Kong and the increasing presence of the Chinese government, the more totalitarian of the two systems, has been occupying more and more of Hong Kong's systems. And personally, I believe that the reason being is that China is running out of money. And so China is basically seizing upon other assets. And that's the big fear, is that at some point in the not so distant future, China proper is going to hammer down on Hong Kong, and they're going to get to seizing assets, physical assets first, and then they'll work on the digital ones. But gold, silver, any kind of precious jewelry, anything like that, they're going to be seizing. And that is the big fear. You know, that's what's leading to the Chinese everyman investing in foreign real estate. You know, buying houses in Canada and the United States. You know, because they know that our economy is slowing down means that we're not buying as much stuff from them, which means their economy is slowing down. And so, you know, the government's got to put something in the wallet to be able to pay the soldiers and all that other shit. You know, they got this big ass command and control infrastructure to maintain, and shit, that's millions and millions of people that they've got employed doing that. Doing all that monitoring and social scoring and all that bullshit. You know, I mean, a lot of it you can do digitally. You know, a lot of it you can do online, and a lot of it you can do with bots and AI and all that other shit. But when it comes to enforcing your mandates, at some point you do need to employ people. And those people get kind of expensive after a while, especially if your unit of account, the yuan or the RMB, are declining in relative value. And when you're not having the previous amount of GDP that you were receiving, and even worse, you don't have as much production going on in your own economy, I think that China will, overall, they'll be okay, because the fact of the matter is they still have the production capacity that's been left there. A lot of companies are pulling stakes, but they're not doing so completely. You know, meaning that they're not bringing every single machine back. They're not evacuating the large warehouses full of shit. They're just selling it to locals. Because it's easier and they actually make money that way instead of trying to cart it 8,000 miles back across the ocean. And so with that, they're going to have the capacity of what they have now, and you know, being able to expand based on what they know and what they've learned. But I don't believe it's enough to sustain their upward movement. You know, they've had this issue that's been popping up ever more in China, where the people that live there, they get paid in relative terms equivalent to people here in the U.S. You know, when they when they go out, what they earn at with their paycheck is enough to be able to sustain them, right? It's not equivalent in U.S. dollars, though. So I mean, it is there, but it's not here. You know, that if you had those RMB with the markets here, you would be able to get less in relative terms. I mean, it's more there because it's their national currency unit. But in any case, where I'm going with this is that despite that fact, you have to dial back to like 30 years ago when everyone there was basically like low-level workers that were participating in those fabs and whatnot. They're basically low-level workers, and they worked themselves up. You know, between additional training that they were receiving that was funded, of course, probably by the manufacturing unit that's there. You know, so whoever it is, if it's Grumman or Intel or whoever, that they're receiving instruction, they're receiving experience, or they're accruing in experience. And this makes them more valuable to their company. So they go from being a ground worker to a shift supervisor, or a shift lead, and then a shift supervisor, and then a product manager, or something like that. You know, but they go up in the hierarchy, and as they're doing that, they're earning more and more money. They're getting better and better lifestyles. Well, you know, fast forward 30 years of this. You now have people working in those factories that are the children of people who worked their way up over the previous 30 years. So they not only have a higher expectation, but they also have higher competency because they're not coming in the door without any context. Their parents did it for 30 fucking years. Probably 18 or more of which where they were still at home. And so the point being is that they're not coming in raw. They're not coming in untrained. They have some competency, probably even some college education on it. And so when they come in the door, you can't just give them the lower paid job. I mean, there's plenty of people that you can pick up off the street to do those. But so that leads to a higher percentage of your workforce that, yeah, they're bringing more to the table, but they cost more. You know, and that's one of the things that it makes it less appealing to ship stuff to China, because you're not just buying up a bunch of grunt workers anymore. You're having to pay executives and shit that have been in the system for 30 years, and they know it better than anybody else. And you have to deal with them because of that. I mean, that's one of the drivers I can see anyway for why China was becoming less and less the trade partner, you know, the preferred trade partner, or the trade partner of first resort when it came to, you know, shipping your work off to somebody else. But, you know, that has consequences, and I think we're only now beginning to see them. And, you know, with the velocity of money being what it was, it's a lot easier to hide things like the fact that you're sitting on 93 tons of fake gold. You know, people just want to look at it and say, oh yeah, the gold's there. That's about all the qualifiers you need when the money's just jumping around. But when the Chinese government is looking for assets to seize control over, to back up their needs, you know, to be able to borrow against, they're doing assays of these gold reserves, and they're finding bars that aren't completely fake, but have chunks of tungsten in them and stuff. And then they're finding this 93 tons. That's a fucking shit ton of gold, dude. I mean, that getting resolved right there, all those owners of the gold being made whole and whatnot, it's going to have a dramatic effect on the price of gold. I mean, 93 tons is no laughing matter as far as overall supply goes. So anyway, gold is only one of the hedges that people are going to fly to. You know, there's always like real estate, and of course there are digital assets like Bitcoin and cryptocurrencies, but there's also like art, there's also wine, cars, so on and so forth. But I got this one here. It's on news.bitcoin.com, and this one's by Jamie Redman. So yes, penis. Non-fungible digital artwork sale shatters records. Picasso's Bull NFT sells for $55,000. During the first week of July, news.bitcoin.com reported on the growing sales of non-fungible token artwork being sold on marketplaces like OpenSea, Nifty Gateway, and Marketplace. Just recently, the NFT market Nifty Gateway broke records, selling a piece of digital artwork created by the artist Trevor Jones for $55,555. Non-fungible tokens, NFT, and digital artwork have collided, and the concept has grown exponentially during the last few years. In 2020, however, the NFT digital art ecosystem has swelled significantly this year. Statistics show that during the last week, there's been 14,654 sales and $1.2 million in weekly trade volume. The average price for a single NFT out of all of the NFTs sold during the last 7 days is roughly $82. All-time records show over 4.7 million NFTs have been sold, according to nonfungible.com. And there's been 103 million in global NFT trade volume. The average price for any NFT during the entire existence of NFT records is about $21.70. But there are some NFTs that sell for hundreds of dollars, even thousands. Data shows that the NFT marketplace the NFT marketplace Nifty Gateway closed a record-breaking auction of a piece of digital art called Picasso's Bull. The 1-out-of-1 edition was created by Trevor Jones, and it sold for $55,555 on July 23rd. The colorful content was designed in the form of a non-fungible token called Nifty and sold to the highest bidder. Nifty Gateway launched in March 2020 as a, quote, all-in-one platform to buy, sell, and store your digital art and collectibles, or Nifties. Since Nifty Gateway team launched the platform, the marketplace has attracted artists like Trevor Jones, John Bergerman, Kenny Scharf, and Say Adams, or C. Both NFT marketplaces, OpenSea and Makerplace, have been doing very well in recent months too. Popular artists on the marketplace include Frenetic Void, Jose Delbo, Javier Aries, and Katie Arrington. News.bitcoin.com recently reported on how the artist Terry Flaxton was selling a 4K video art on Marketplace and OpenSea. Wonder Woman comic book illustrator Jose Delbo was also featured on the NFT marketplaces last month. On Sunday, August 9th, the top number of NFT sales volume went to Sandbox with $294,000 in trade volume. Sandbox is followed by Super Rare, $248,000, So Rare, $150,000, Ethereum Name Service, $83,000, Decentraland, $81,000, Axie Infinity, $57,000, and Maker's Place, $35,000 during the last 24 hours. The NFTs being sold in Sandbox represent the land parcels on the community-driven UGC Voxel platform. Maker's Place sold roughly $4,506 worth of NFT artwork between 22 sales during the last 24 hours. One of the largest sales of the day on Makerplace on Sunday was $346, and the NFTs sold at 11:34 a.m. Eastern Time. 5 hours before that sale, a piece of digital artwork sold for $279 worth of Ethereum. The non-fungible token universe is growing wildly, and it's come a long way since the early days. The $55,555 Picasso's bull auction is a record-setting sale, but NFTs have sold for thousands of dollars years ago as well. One of the most famous sales in NFT history was the rare Pepe blockchain auction sale of the very rare trading card Lord Keck, only 10 made. In 2017, Lord Keck sold for a whopping 1,600 counterparty XCP, or $22,720. Fuck yeah. So yeah, it's very interesting. You know, people are looking for all kinds of places to hide their monetary value. You know, anything that'll retain value better than the currency units that are circulating in the economy. You know, I mean, that tells you something about the confidence they have in it. You know? I find this very interesting, though. It's kind of an alternative to things like rare art, you know, rare physical art. And I think that it's especially interesting because you don't have to worry about any of the degradation that physical art suffers. You know, I mean, they have, you know, dozens of curators that tend to paintings like the Mona Lisa and others. And I mean, they're constantly having to touch them up and whatnot. So, yeah. Anyway, the next one I got here is on news.bitcoin.com again. Man, I happened upon this trove today. And this one's by Kevin Helms. And it was authored 2 days ago. But yes, penis. Goldman Sachs cryptocurrency possible collaboration with JP Morgan and Facebook. Goldman Sachs is considering creating its own cryptocurrency. Having recently appointed a new head of digital assets, the company indicated a possible collaboration with other companies, including JP Morgan and Facebook. JP Morgan has created the JPM coin, and Facebook has proposed the Libra cryptocurrency project. JPM has more than that. I think they have USDC too, but I could be mistaken on that one. Goldman Sachs cryptocurrency plan. Global investment bank Goldman Sachs has recently appointed a new head of digital assets, Matthew McDermott, a managing director who ran the investment bank's internal funding operations. He has now revealed that Goldman is exploring creating its own cryptocurrency. CNBC reported on Thursday, quoting the new digital asset chief as saying, quote, "We are exploring the commercial viability of creating our own fiat digital token." Yeah, go fuck yourself. However, McDermott added that, quote, "It's early days as we continue to work through the potential use cases." He's expanding his team at Goldman Sachs, reportedly hiring Ollie Harris, JP Morgan Chase's head of digital asset strategy. Harris was involved in the JP Morgan cryptocurrency, the JPM coin, and was also a vice president in charge of Quorum, the Ethereum-based blockchain platform that underpins the JPM coin. The coin, pegged to the US dollar, enables the instantaneous transfer of payments between institutional clients. JP Morgan explained on its website. The new digital assets head said that it is crucial to build, quote, consensus with other banks, institutional investors, and regulators. The publication noted he believes that, quote, the technology will only take off when it gains a critical mass of users across the world of finance, and industry consortiums are the best way forward. McDermott further explained that he, quote, spends a lot of time talking to other companies, including JP Morgan and Facebook. The social media giant has proposed a cryptocurrency project called Libra, which recently updated its plans to better comply with regulatory requirements. According to CNBC, he indicated, quote, one Goldman project involves collaboration with JP Morgan, potentially regarding how the two banks' nascent technology efforts could work together. In the next 5 to 10 years, you could see a financial system where all assets and liabilities are native to a blockchain, and all transactions natively happening on-chain. The new digital assets head opined. Yeah, he's full of shit. He believes that, quote, since the boom days of Bitcoin and a few years ago, interest has shifted from retail and rich investors to large institutions. That's bullshit too. They've been Goldman Sachs and those fuckers have been invested since like 2013, 2014. The publication conveyed, quote, we've definitely seen an uptick in interest across some of our institutional clients who are exploring how they can participate in this space. It definitely feels like there's a resurgence of interest in cryptocurrencies, McDermott was quoted as saying. Goldman Sachs has not been pro-cryptocurrency in the past. In May, the investment bank told its clients that, quote, cryptocurrencies, including Bitcoin, are not an asset class. Yeah, they can go fuck themselves. They are not in any position to determine exactly what is an asset class. That's your job now. Didn't you hear? I swear, these people think that they have some like just granted position in the world economy, and maybe amongst their friends they do, but their friends don't run crypto. Some of the projects in this space are in fact run by their friends, and that's much to our dismay, but that's beside the point. The point of the matter is there isn't anybody at Facebook, JP Morgan, or even Goldman Sachs who knows how to invest your money better than you do. Not a single one. You are the safest hands. And you simply don't even need these people in participating in cryptocurrencies. They can participate all they want just like you. But your participation is no longer dependent upon their participation. And it's something they haven't come to terms with that shit yet. You know, they've dabbled their feet in this space. They've been here since, like I said, 2013, 2014. And if you've been paying attention, you know that. You know, Goldman Sachs bought Circle. Circle runs, one of the other fucking stablecoin projects is Circle. It might be USDC is theirs. But JP Morgan has their own stablecoin too. And basically, they're just doing the iFinex business model, you know, where they have an exchange on Bitfinex, an account on Bitfinex, and they issue out their USDT equivalent, and they run it through those exchange accounts. They sell it for Bitcoin. It's completely free because the token that they're using doesn't actually have any real collateral, or worse yet, they're commingling their fucking customers' money as collateral for their USDC and their other stable coins. They sell it for Bitcoin, and then they take the Bitcoin and they sell it for US dollars, and then they withdraw the US dollars. And this is how I believe they've been able to suppress the price of cryptocurrencies, is that they simply buy them with bullshit tokens that they don't actually have the US dollars backing. And you know, some of these stablecoin projects don't even claim to have a US dollar peg or fiat currency peg. Just some manipulative little thing going on in the background that supposedly maintains a stable fucking price despite the activity of the market, it's always relatively around $1 in value. That's by fiat. That exchange rate is recognized by fiat. Because I'll state unequivocally, I believe that, again, Goldman Sachs, JP Morgan, all these banks, the bank accounts that, or iFinex probably doesn't even have a real bank account. But they own both Bitfinex and themselves, and so they can say what they have. That these coins probably don't even exist. Maybe we'll be able to find a transaction on the Omni layer or on Tron or on Ethereum or something like that we can look at and say, oh, there's a transaction for X amount of gas that's, backing this transaction that supposedly represents $2 billion being issued in USDT. And that we're just taking it on faith that $2 billion exists somewhere in a bank account that iFinex or Tether or Bitfinex owns. And therein lies the fiat. We don't know what iFinex's cash reserves are. We're taking it on faith that the $12 billion worth of USDT that's circulating out there is actually collateralized in a bank account somewhere. Because that's the promise that they started with. Or even that they have, like debt obligations where they've loaned out money and whatnot. Okay. Prove to me it's not just crypto. Or prove to me that it's actually your crypto and not somebody else's. That they've given they've given you their public address so that you can claim it as one of your assets, despite the fact that they are the ones with the private keys and they could spend them right out from under you at any time. I believe that all of these trust vendors, one of them, just one of them, is going to get $100 billion tied up in a payment channel or with one of these smart contracts or whatever. The shit's going to get hacked, and there's going to be this major call. Oh, we got to regulate crypto. We got to regulate crypto. We got to stuff a lawyer up everybody's ass. We got to monitor everything that happens. That's my prediction. I think they're going to fail no matter what, though. That we're not just going to see a failure in one place. We're going to see a failure in multiple places. And there's going to be a lot of finger pointing as to who is responsible. And the fact of the matter is the only people that are responsible is you. If you weren't retaining the possession of your funds yourself in your wallet, on your node, whatever, if you weren't doing that, and some big clusterfuck happened and you lost all your money, that was your fault. That wasn't the fault of anybody else out there. Anyway, let's go ahead and throw back down with some music. And I'm feeling the need for some Sepultura. And so here we go. Sepultura, Altered State, here on Coin Metal. And that was dope with One Fix. And it is with that I'd like to close out this episode. Thank you very much for listening. I certainly do appreciate the support. We'll be back again on Wednesday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else will do it for you. And so as far as our last dance is concerned, we're going to have to keep it short and sweet. I think we can get away with a little bit of 9 Inch Nails. Big man with a big gun. Last dance here on Coin Metal. Thank you again for listening. And y'all have an excellent evening. Good night.